Mayuresh Joshi also joins in with his perspective on the fundamentals. Mayuresh, good to have you on the show. Are we going to be looking at a really serious dash for the all-time record highs post the budget?
Afternoon, Tanveer. I think if the market is expecting a lot coming through from the budget in terms of incentives coming through, specifically in terms of tax breaks, and secondly, again, I think a large part of the factoring has been done in terms of how the planned expenditure will take place, specifically in areas like rural financing, irrigation, agriculture, infrastructure, roads, power. So largely, again, I think we're trying to build in a very decent spend coming in from the government, and with the tax buoyancy that we've probably seen specifically from the indirect taxes which have risen sharply year on year, and tax GDP ratio expected to move up at least in the next couple of years, you're probably looking at the government maintaining its target set out both on the fisc and the current side. And having said that, my own sense is that if this probably comes through along with corporate tax breaks and the kind of recent clarifications we've received on the CBDT circulars that had come out specifically for FPIs, the market should be in a good state. So again, I think the basic hinging factor for the markets would be re-rating in earnings. That might have taken a breather in Q3, Q4, but earnings so far have not been bad at all. So in that sense, again, I think earnings recovery should start happening in the first half of FY18, and that should probably lead to the markets consolidating probably around these levels at this point of time. But if the budget delivers and if the state elections go as per schedule that the markets desire, my own sense is that the markets are in a good state, with earnings recovery probably coming in the first half of FY18 itself.
Okay, Mayuresh, what's been that one stock that has been spoken about the most at the angel dealing room and the floors today, and why so? That one stock.
So largely, again, I think it's not dealing that I want to talk about, but again, post results, Maruti is something that has kept on delivering over the past few quarters. The numbers again were impressive this time round, with top line growing around 12.3%, the PAT growth at 47.5% on a year-on-year basis, and though margins disappointed a tad bit, my entire sense is that the volume growth which Maruti posted a couple of years ago, that should show a consistent amount of growth in the next 2 years. With the kind of reception it has received for Brezza, Baleno, and even the newly launched Ignis, where bookings have been extremely encouraging as per our dealer checks. My own sense is that Maruti's volume growth will show an impressive CAGR of almost 10 to 12% over the next 2 years. Having said that, the petrol component in terms of the overall sales is close to 59.3%, and that's seen a significant jump. Realizations have improved not on a sequential basis but on a yearly basis as well, and this really augurs well in terms of how the earnings profile is expected to pan out. With the new capacity in Gujarat expected to churn out 250,000 vehicles a year, my entire sense is that the debottling in terms of capacity constraints that Maruti faced is going to be over the next few quarters. And again, the earnings recovery in terms of both margin expansion, because the kind of input cost jump that we've seen is probably getting offset in terms of the support and the demand that it is probably receiving, where it is able to hold on to its price realizations. So largely, again, I think trades around 19 times FY19 earnings. Very confident on Maruti posting an EPS of around 310 rupees over the next couple of years. So remain extremely sanguine about Maruti as a stock. I have been optimistic over the past few quarters. I remain so over the next 4 to 6 quarters, to say the least.
Okay, stay on, Mayuresh. Let's talk about the stock of the day, and the stock of the day arguably has to be something that is result based, and you know, then I was looking at the list, and Pranay decided to speak about IIFL, and therefore I decided that we'll speak about IIFL once Pranay highlights why is it and what's the trading pattern been for IIFL today. Now Pranay, we all know it came out with good numbers. What was the standout feature? What's the trading pattern been today?
Well, two standout features from the results. First of it is the NBFC business, and as we know, it is mostly leaning towards the retail side. Fearing the kind of impact on demonetization that we've seen in some of the others when it comes to the retail exposure, here it still managed to grow admirably by 15%. that wasn't expected, which is why the NBFC loan AUMs now stand at over 21,000 crore rupees, and that too with an improvement in asset quality on a sequential basis. So gross NPAs are at 1.8%, an improvement of 7 basis points, and net NPAs have come down even more by about 18 basis points at 0.65%. The other key contributor to their earnings is the wealth management business, and this time it has grown at over 22%, crossing the 1 lakh crore milestone when it comes to the wealth assets. Also, the capital markets business has done extremely well. The equity market turnover for the broking business is up a staggering 60% on a year-on-year basis. So if you look at the stock data today, it's the best rally that we've seen in the last 3 months. Actually, it was up in double digits. It just tapered off a bit of that move in the last 30 minutes or so. But right now, it's quoting at the highest level in the last 2.5 months, as is the market. Is the top performer on the BSE Midcap Index, and the volumes are up more than 11 times last 5-day average, making it the best performer from the brokerages pack as well.
Okay, thanks a lot for that. Pranay, in fact, hear out what the management had to say about the results as well.
So our thrust in our NBFC, our thrust is on 3 segments. One is retail home loan, second is SME loans, and the third would be, your commercial vehicle loans. And of course, home loan is already the largest segment for us. If you look at the complete mortgage retail, that's more than 50% of our NBFC book. And there is a lot of effort to go into the affordable housing segment and the low income category and the lower middle class, where the average ticket size is only about 12 to 14 lakhs. Currently, the average ticket size for home loan is around 24 lakhs, but we expect that will fall further in the next few quarters. Because of the various measures announced by the government, the entire focus on affordable housing, the reduction in the interest rate, a lot of subsidy schemes run by the government, we see a lot of growth potential. Similarly, on the SME segment, we provide very small SME loans of between 10 to 15 lakhs to really micro SMEs and shopkeepers, and that segment again, we have not seen any impact because of the recent slowdown, and that segment continues to be strong. CV of course has slowed down, so that will take a while to pick up, but then again I think FY18 that should be a good growth driver as well.
All right, just a few minutes to go before we shut shop for the day, for the week, and start counting down to the budget. Just about 4 days to go for that. Let's get a quick sense of what dealers are feeling about the start of the new series, and a heavy one as that promises to be. Yatin?
Of course, the sentiment is quite upbeat, Tanveer, and if you look at the weekly gains, we are up 2.5% for the week. And the rally that we are seeing in the week before the budget is clearly one of the biggest rallies that we have seen in at least 1 decade. So if you look at the data for last 10 budgets, we have never seen such a rally which has come into the marketplace. So the kind of excitement we are getting into ahead of the budget is something which is at the peak, at least for the last 10 years, is what dealing rooms are talking about. In fact, if you look at Adani Group stocks, talk about a lot of mid caps, on decent volumes, all of these stocks are moving up, clearly indicating the kind of trading activity pickup that we have seen in the last 4 or 5 trading sessions. But in terms of dealer recommendations, ICICI Bank is something wherein domestic fund flows are continuing to be quite robust. In fact, a couple of private banks are also seen wherein domestic funds are aggressive buyers. In the mid-cap space, Indocount, watch out for that one, as we have a lot of these HNIs, buying in for a 4 to 5% trading pop. And finally, we have FSL, Fosso Solutions, that is stock which is active for the last 2 or 3 trading sessions. Some order win buzz is also here, so dealers expect a short-term 8 to 10% upside here as well.
Okay, thanks a lot for that, Yatin. So those are some strategies as far as what dealing rooms are recommending in the session today as well. BHEL 6.5% higher. Siddharth Bhamre, I'm tempted to come to you on this. 140. Maybe we discussed this during the show, but at 6.5%, 140. PSU name. PSUs are finding favor. What do you do here?
I think it's moving higher, as I mentioned earlier. Also, 165, 170 is my target price on this. Even at current levels, it's looking quite attractive. Look at the volumes in cash market, 1.5 crore shares traded, and volumes are significantly higher, almost double of what it was on the expiry day. That speaks a lot for itself. clearly stating that there is a huge buying which has happened, and even those who have missed out can create fresh longs at current levels, but then you have to be a positional trader, not a BTST or 1 or 2 day traders in such calls.
Okay, 3:19, almost that time of the show wherein we get you the closing strategy. So let's do that and then get in some final thoughts from Mayuresh Joshi. I tell you what, look at the small cap space. That is very, very active in the session today. So good moves at the CNX small cap space. That's been the case for the large part of the trading day today. But it's not buckling down under any kind of pressure. Maybe the index came off a little bit from the highs of the day, but the small caps have been active. Look at JSW Energy. We're talking about some power related names doing well. JSW Energy has seen a bit of a spike. BASF India has seen a bit of a spike. So those are a couple of names that just showing that momentum in the last few minutes of trade. But closing strategies from our experts. Pritesh, if you were to take one BTST or STBT position as the case may be, which one would that be? Your top closing strategy.
Now see, for short-term trading, as I mentioned earlier, that we have reached a point where you should be in a stage that we are chasing momentum stocks, and one particular stock which is on my radar is Petronet. We have seen strong rally coming in from the oil and gas space, from the energy space in these weeks, in fact in this month's trade, and Petro is the one which was consolidating for a long period of time. We are talking about a breakup from a triangle pattern on the weekly chart, and I believe that 415, 420 should be the near target of this counter.
Okay, Kunal, your top closing strategy?
I would go with a STBT, and that's a sell on LIC housing. Now, the stock has shown some good momentum in the last 3-4 trading sessions, but I believe that it's heading into a key resistance mark, which is 560-565 zone on spot levels. Hence, I believe that maybe if the market consolidates over here, opening few STBT or maybe a sell trades could not be a bad idea. I believe the stock can head towards at least 545. So very short term oriented call, sell on LIC, stop loss 565, target 545.
Right. Thanks Kunal for that. Siddharth, come to you. What is it that you'd recommend?
So I would stick by large caps, and sorry for repeating ICICI Bank, but that's the stock which I feel has substantial headroom from current levels. If you draw a channel in which ICICI Bank is moving, it has just taken support at the lower side of the channel, which is around 255, 258, and now the upper side of the channel is above 310. I'm not saying it would go above 310, but certainly 290 looks on cards, and even at current levels I would suggest that one can go long in ICICI Bank.
Okay. ICICI Bank, of course, has been one of the standout performers in the session today. And if you were to drill it down to specifics aside of ICICI Bank, what a move on BHEL, what a move on even a Bharti Airtel and a Bank of Baroda. It's really all the company names starting off with B, given that we are, of course, staring at a budget, are actually rallying. Not that there's a correlation out there, I'm just trivia, so to speak, that I'm highlighting. NTPC, HDFC and SBI are also holding fort. It's in fact not only about the Airtel, it's also Idea Cellular, which is picking it up in the session today, so almost 2.5% higher as we speak. Kunal, do you see a trade within telecoms or let be?
I think maybe there could be a chance you might see some bounce or continuation of bounce in Idea. I was just looking at the charts in the morning as well. The stock is even after an intraday sell-off which we've seen on Wednesday, the stock is showing signs of good resilience to probably bounce back again. Now, in terms of trading levels, I think 50-day moving average for Idea has been on and off a good support and resistance the way you look at it. Now I think it's trading at 74, the 50-day moving average. So I think from a trading perspective, 74 could be a stop loss. There could be a chance you might see the last 1 week up move on Idea probably unfolding into maybe another 7-8 rupee upside move on the stock. So traders can look at buying the stock, but keep a strict stop loss of 74 and go long on Idea.
Right. Okay, I just also want to get in a quick perspective, Mayuresh. Do you think that the rally in BHEL is showing that once again the state-run companies will find focus within this budget, or is there something structural in nature happening there?
No, possibly, but again, I think one really needs to be selective within the PSU space per se. With what we have seen in terms of the government capex still remains extremely strong. The private capex is clearly lagging behind. And again, I think it is another 3-4 quarters away that the private capex will pick up meaningfully. Having said that, the kind of orders that BHEL is L1 in, again, it's got limited kind of visibility in terms of order flows over the next couple of years. And though the worst might probably be over in terms of how margins are, in terms of executions of its low margin legacy orders, in terms of what it's probably written off of its book, in terms of slowing order book as well, that largely has got built into the price. But is there an earnings recovery or earnings re-rating for a stock like BHEL? I think numbers have to be really consistent, and we're at least for a couple of quarters for us to really say that there has been consistency achieved in earnings, and that consistency will very well continue over the next year and a half. That is probably not coming through for BHEL, and the lumpiness in terms of earnings execution still carries on its balance sheet. So unless we probably see that happening, I do not see potential huge upsides onto the stock. It might just have sideways move or consolidate around these levels.
That may be the case. There's also move in NTPC. Siddharth, you want to take a call there?
Tanvir, today morning itself, there was a lot of indication that PSU stocks, irrespective whether it's banking or capital goods or power, would do well. That was the indication coming on the screen. And NTPC, again, the stock has been, on the roll. And first we saw breakout in early part of Jan or mid part of Jan. On 13th of Jan we saw, huge spike. Then there was a consolidation, and again there is a spike which is happening in NTPC, and the stock has changed. Stock has been a range bound stock, has not gone anywhere since years. With these moves since last 3-4 months, NTPC has changed the structure of the stock, and the price movement has changed the structure of the stock, and I think there is substantial upside from current levels in NTPC. But point is that should I buy now as a trader or an investor? As a positional trader, yes, I can buy now. As an investor, probably, you can take some valuation calls, but then it's looking attractive for further upside from current levels. I'm expecting NTPC to move towards 190, 195. That is where, some resistance would creep in, but it's a positional trade, not a BTST or 2-3 days.
Dr. Reddy says, talking about some legal developments, they've not been served with legal papers for Mezion, a drug that has been in contention, and I think that's what's keeping the stock lower. Very quickly, before we start wrapping up, and we'll get more perspective on this story, what's the view on Dr. Reddy's? It's a divided house among pharma today, Kunal?
Yeah, I think the stock has not been performing, Tanvir. There are bearish crossovers in terms of moving average. The stock is trending lower. It's been making a series of lower highs, lower lows, and post that big sell-off which we had seen, I think 4 or 5 months back in the month of July odd. I think post that the stock has never shown any signs of great recovery. So maybe I think the stock would probably continue to linger lower. It's trading below the longer term averages, so I think keeping those as stop losses, maybe traders can initiate fresh shorts.
Okay. Gentlemen, we start wrapping up the market. It's been a good day, but again, for viewers tuning in for the last few minutes of the session, it's really been about this month performance, which reflects the market's confidence getting into the budget, perhaps the sharpest rally that we've seen in the last 10 years. The market has not gone into the budget as confident as it is going into it this time. 86.45 on the index. That's about a 5.5% return in just the first month of 2017. Close to 8.5–9% return coming in on the Bank Nifty for this month. Again, a very, very exuberant market with the Greed and Fear Index also reflecting that market confidence is very much intact. It's an encouraging show actually. The Bank Nifty closes up about 1.25% higher. ICICI Bank rises among the other large cap private sector banks as well, but not just that, the laggards actually have picked up momentum. So earlier on you were seeing Yes Bank, IndusInd Bank, even Axis despite numbers picking it up, Kotak Bank doing well. It's now ICICI Bank followed by an SBI and a Bank of Baroda, which are doing a sort of a catch up to the large private sector banking peers. And volumes are excessive out there. So ICICI Bank has done 8 crore shares traded in the session today. You have Bank of Baroda doing about 1.1 crores, likewise SBI 1.7 crores. So there's a big burst of volumes there, and the market is upbeat about the underperformers. Like I said, it's a catch-up rally. Reliance Industries up about 0.7%. Aurobindo, Tata Power, Ambuja, Maruti, all of them holding out. Among losers, ITC is down 3%, Bosch is down 1.5%, Lupin is down about 1.5%, Wipro is weaker, HUL is a bit weaker, Tata Motors is down about 1.5%, and some of the privates are actually seeing some profit booking. But other than that, it's a good show from all quarters. Don't just go by the headline numbers. It may seem optically like just a 0.5% gain, but in the internals of the market, a lot has happened, and the build-up has really been slow and steady from the start of the month. Adani Enterprises from the broader markets, 15% higher. You have the market breadth, which has been encouraging, so that's a good performance. I'm also seeing IFCI picking it up. Ashok Leyland ahead of budget, 6.5% higher. NHPC is done well. Ashok Leyland actually is nudging 95 at last count. BHL is, we've already highlighted that one. IIFL Holdings have about 5.5%. PTC is active. DV's Lab is active. Torrent Power is doing its bit. A lot of high volume trades, actively traded stocks are really seeing traction in the session. Closing into the final tally, the closing gong goes and the markets shut for the day and for the week. But among losers from the broader markets, I see some of the real estate stocks still being laggards, primarily among which is Indiabulls Real Estate. Mayuresh, come Monday, in fact over the weekend also, I'd imagine everybody would just be focused on what may come out in the budget. The build-up has been so strong. Do you agree with me that this confidence is perhaps the highest that we've seen in recent years, and you also feel it among your peers? And if so, what is the confidence hinging on, and can it carry on the budget rally post the event?
Well, largely again, I think the classic dichotomy between whether it will be an investment-led budget or whether it will be a growth-led budget is something to disappear in the next 4 days. But my own sense is that the Exchequer is going to be very, very pragmatic and probably have a balanced approach in terms of both an investment-led and a growth-led initiative taken in the budget. And rightfully so, I think. What you probably see in post-demonetization, specifically in semi-urban and rural areas, I think the growth momentum and consumption need to pick up substantially. And at the same time, when you're looking at the Indian infrastructure needs itself, a lot needs to be done in terms of both debottling as well as probably pouring in fresh investments on the infrastructure side, whether that be roads, power, railways, ports. So in that sense itself, I think it's going to be a balanced way of looking at an investment and a growth-led budget. At the same time, I think if he's able to do something on the tax rates, which will probably lead to further consumption, probably both from the urban and rural side, I think that will be a big fillip in the budget as well. And again, as I mentioned earlier, I think as tax rates specifically on the corporate side start coming down meaningfully over the next 2 years, you're going to see probably greater arbitrage coming through even from the corporate side. So largely again, I think it's going to be a focus on all these factors combined together. And as said, I think the rural focus will be far more evident in terms of how the planned expenditure will pay out in the budget, and that probably will lay heat in terms of how the market's corporate earnings will pan out, because a large part of the earnings basket is being captured by the consumption patterns in the country. And if that really gets a kicker, my own sense is that the corporate earnings, which have been languishing, will have a multi-year effect going forward, plus working on the low base of the current year that we are probably looking at. So looking forward to the budgets in a very, very positive and a pragmatic way, at least from my end.
Thanks, Mayuresh, for that. Thanks for your time as well this afternoon. Quick round of opinion from all our technical guests. Pritesh, start off with you. How are you going to be approaching the budget week and the budget event?
Also, I'll take at least a couple of minutes to explain this. It's really funny, how things can change, because on December 26th, 2016, Nifty had a low of 7894, and exactly, a month after, on 26, today it's 27 Jan.